Today, I'm going to start the second semester, but Mr. Rupasinghe, who did the first semester, has a little bit of technical difficulty because of the quarantine laws. Therefore, I was invited to start the second semester. So maybe this week and next week, Sundays, we will continue. And as soon as Mr. Rupasinghe is able to commence his sessions, we'll give him time. He needs about 3 to 4 classes to complete the first semester. As some of you may be knowing, my name is Ratnayaka. Just a little bit of introduction about me is that I worked as the compliance officer for HNB and Cargill's Bank, and I was the founder chairman of the Association of Compliance Officers for Banks. We could do a lot of things for the benefit of all the bankers and finance companies when we were in the forum. So therefore, some of you might know me, others. My banking experience is over 40 years. If I count the number of years in retirement, but doing consultations and lecturing to banking institute at the universities, I count about 48 years experience. So I think going by the syllabus, financial industry and risk management is the main topic of the second semester. I'm confident that I can do justice to the content of the second semester, including risk management of the field of compliance. So therefore, I think about last week, about 10 days back, I was able to share with you a requirement of an individual assignment. I hope almost all of you would have seen the assignment. So this is the assignment document. I need to explain a little bit on the assignment document. So we'll take some time to go through the assignment. It is an individual assignment. Now, for the sake of course requirement for you to receive your diploma in compliance, course requirement says that assignments carries 30% of the marks and final exam carries 70% of the marks. So therefore, the assignment will give you 30% of the marks. But I would personally urge the Institute of Bankers to carry more weightage for the assignments, especially because of the pandemic situations. Because final exam, we don't know when we can have it. At the same time, most of the universities now rely on the assignments to the students. So I would personally be happy if Institute of Bankers changes the weightage for the assignments to at least about 50% of the marks. But however, as per the course requirement, you can earn 30% of the marks by doing the assignment. So assignment, I think Mr. Rupasinghe has not given you an assignment so far. So therefore, this is going to be the assignment number 1 for your course. So basically, the topic of the assignment is regulatory requirements on KYC customer due diligence, enhanced due diligence, and the need for compliance. The need for compliance. Basically, you have to research and write on the know your customer regulations, customer due diligence regulations, enhanced due diligence regulations, and the necessity to comply with it. So I given some description on the first page. I'll discuss with you first, and then come back to this other content of the assignment. Or better we go through the content of the assignment, isn't it? So the assignment to be submitted on the 30th of June, I guess 3 weeks time is adequate to write about 3,000 words plus or minus 10%. And references should be on Harvard style. And then you could submit them by email to menaka@ibsl.lk or my personal email or both. And it should be a Word document on font size 12. And I am suggesting some subtopics for you to write on, because I need to give you a direction, the way, which direction for you to think. The subtopics I'm suggesting is acknowledgement, executive summary, content page, introduction, regulations and parliamentary acts, compliance policy, recent penalties. There have been a very good number of recent penalties publicized by the FIU, right? Since they are public domain, you could quote them as well, because most of them I gather is on, particularly on KYC, lapses on KYC. And then the best market price practices, mindfulness. Isn't it a new topic? I will explain as we go on. Mindfulness is when there are regulations. People just, for the sake of complying to the regulation, they do something, but they don't focus on the main requirement as such. For example, now when there are KYC requirements are there for you to record name, address, and telephone number, or employment, and then correspondent address and various things. They just keep copy down those facts and then keep a record only, but they don't go through the real meaning of why they are needed. Why they are needed. That is mindfulness. If I may quote an example as quoted by a famous priest on Dhamma's sermon, mindfulness is, the example is, there have been a lady who is very religious, and she has been following meditation programs. She has been out of her house for about 7 days, 14 days, or 10 days, like that, on meditation programs. So there have been some valuables in her house, and once or twice it had been burgled. Thieves have entered. So what this lady has planned to recruit a watcher or caretaker to look after when she is on meditation programs. So whilst the watcher was on duty, she had been on meditation program. Thieves have come, and thieves have collected the valuables and then robbed the house, loaded into lorries or whatever, and then gone. So when she returned, she found that her house was burgled, but the watcher is there. So she had asked him why, what had happened? Why were you not there? The watcher had replied, you wanted me to just take care and then watch. So I did. Is it a laughing matter? So what do you learn from this? The watcher's duty, watcher was employed to take care of or prevent robbery, prevent thieves entering the house. But for the name's sake, watcher had been watching it happening. So that's mindfulness. I guess you get the message. So there is some more build-ups on this example. We'll talk to them, refer to them later on. So you know what to write on mindfulness. Or you can change the subtopic to some other version and then present your work or writing. The next subtopic I'm suggesting is facilitating customer transactions. Facilitating customer transactions, meaning you have to accommodate customer transactions. And then from the beginning itself, when a customer is onboarded, you have to understand what type of transaction this particular customer will engage in. You have to have an idea. And then as time goes on, when the relationship grows, there can be developments. So your database must be updated, meaning the KYC and CDD and EDD must be, the database must be updated. So while facilitating customer transactions, it is good for all parties concerned: the customer, the banker, the regulator, the auditor, and the stakeholders in the company or the bank. All win situations if you develop a 360-degree program to update your database of KYC, CDD, and EDD. Then new development using eKYC and blockchain. And then now lately we know VKYC, video KYC as well. I think I requested Menaka to upload the web link on VKYC recently. I think he did. You can also download that. In other words, the customer is being interviewed through video conferencing and the KYC data being recorded. You must also research on the regulatory provisions for eKYC and VKYC aspects. The contribution to the economy. While doing that, while recording and then practicing mindfulness, practicing market best practices, how beneficial it would be to the economy. Finally, the conclusions and the list of references. And when I need to add a little more experience of the compliance community in Sri Lanka, the new developments using eKYC and blockchain and VKYC. Some of you might remember somewhere in the year 2010, that was the final year I was the chairman of Association of Compliance Officers for Bankers. We floated a project to share KYC data and store them in a company like Crib or Lanka Clear. And that project went on to the levels of winning the concurrence of the central bank and the CEOs and senior management of each banks. And finally, we floated the idea through the Sri Lanka Banks Association, SLBA. And we went ahead and called worldwide tenders for the hardware and software vendors to submit their bids. 9 of them submitted their bids, somewhere in the years 2009 and 10. And then we selected 2 of those companies, namely I can remember 3i and Infrasoft. And we requested them to do a proof of concept, meaning to rehearse or demonstrate what they can do for us. Basically, that project, what we were planning to do is that to collect the KYC data of each customer of each bank and each finance company and record them on a central computer managed by a separate company like Crib or Lanka Clear. And we have this Lanka Financial Service Bureau for the SWIFT connectivity owned by all the banks. And that particular company computers to store the KYC data of each customer of each bank, each finance company. And when it comes to the same customer in different banks or different finance companies, identified by the NIC, the additional data gathered is going to be updated to the database. And the services that were to be offered by this company to the banks and finance companies were access to the databases, KYC databases of their customer only, not the customers of other institutions. So it's a dedicated, like the way that the Crib does. The credit performance details of their customer can be downloaded. But in this case, it is dedicated to their client base. But when it comes to regulator or the central bank, they could view the 360-degree customer base from these computers of this particular company. So what do we achieve by planning such things? We would achieve that the risk of maintaining the KYC database of each customer is taken over by this company from the banks or finance companies. So the AML CFT risk is basically about 50% of that is taken over by this company. And furthermore, the regulators, FIU or bank supervision or non-bank supervision or Department of Public Debt or international operation divisions or domestic operation division, whenever they want reports or returns on a pre-formatted standardized format, they could access the computer of this particular company directly without troubling the individual banks or finance companies. So to that extent, the risk of AML CFT was to be taken over at least to the tune of 60 or 70 or 75% by the so-called company. And the main focus of the banks or finance companies would have been to focus on the business with the customer. And such things could be achieved at a fraction of cost that they spend now, because the common entity was to be financed by the contributions, the equity contributions by the owners, namely banks and central banks and finance companies. And they were supposed to be paying a transaction fee for inquiries. So such developments I just wanted to reiterate that as a planner. So new developments, you could think of such projects, right? So balance part of the assignment requirement is that it should be an individual assignment, and students should not be copying from each other, and then also it should be their own work, and referencing to newspapers, books, newspapers, journals, websites, regulations, and other material should be with due recognition to the author, publication, date, year of publication, following Harvard style of referencing. And I also given a description of what is referencing means, particularly the Harvard style referencing. Most of you may be knowing how in the academic world for your university degrees and MBAs and PhDs, how you should schedule your referencing. So please be very professional. And then also a disclosure. You must indicate this particular phrase on the title page of your assignment. Must declare I declare that this assignment is all my own work, and that I have acknowledged all materials used from the published or unpublished works of other people. All referencing have been duly cited, and you must put your name after that and then sign. So at least you must put your name because you are going to submit by email. So signature, if it is possible, welcome. Otherwise, just put the name, right? Any question after that? Any question after that?
So, a small question with the referencing.
Yes, please.
Sir, the word uses this Anglia Harvard referencing. Is that okay, sir? If we use that automatic reference list from the word, if we use, is that okay?
Yeah, that's okay. But just ensure the completeness. All those are new developments which are programmable, and then using new technologies will come at the same time. But you must see for the completeness. You must ensure the completeness. All right.
Okay, sir.
Any other question, please? No? All right. Now, just a introduction to the subject. I think Mr. Rupa Singh, being a former director of the FIU, he discussed with you the directions based on the Financial Data Reporting Act, Prevention of Money Laundering Act, and Convention of Suppression of Financing of Terrorism Act, and many more other parliamentary acts. And based on those, or arising out of those directions issued by the governor, deputy governors, or directors of the sectional directors of the regulator, namely Financial Intelligence Unit, Bank Supervision Department, Non-Bank Supervision Department, International Operation Department, Domestic Operation Department, Foreign Exchange Department, and Public Debt Department. And so therefore, and also there are a few by statistical department and various other units as well. On payment settlement department, particularly the disaster recovery regulations and the Payment and Settlement Act based and the Electronic Transaction Act based regulations, directions came from the Payment and Settlement Department. So now my task is to discuss with you the financial industry and the risk management, basically the banking and the finance companies and other financial institutions, the practice of that financial industry, the practical aspects basically to comply with those regulations. So in my opinion, the KYC requirements, although there is a history running back to 1970s and 1980s, particularly with the introduction of certificates or deposits. Those days in the 1980s, I think I remember Dr. N. Pereira being the finance minister, he wanted to bring the hoarded money in the houses to the mainstream economy, and then he introduced the certificates or deposits, where no questions asked, only a certificate without a name of the owner, and it was as good as a currency note. Those who can pick it up from a road or a dropped CD or thief could claim the ownership of the money. But later on, in the late 90s and then early 2000s, this was looked at a very bad habit. And then finally, the Financial Transaction Reporting Act number 6 of 2006, Section 2 Section 2 requires each and every account relationship of a financial institution with a customer must be maintained with the support of data recorded in the books of accounts. The financial service provider is required to record all the data. Before that, I think from early 90s, from time and again, central bank issued regulations that CDs issued register must be maintained with the name and address, and CDs encash register must be maintained. So that was the history of KYC. So what is the KYC? KYC means know your customer and sometimes know your client. KYC check is the mandatory process of identifying and verifying the client's identity when opening an account and periodically over time. So in other words, financial institutions must make sure that their clients are genuinely who they claim to be. Remember the example that I cited, the religious lady going for meditation programs and employing a watcher. So basically mindfulness. The financial service provider has to genuinely ascertain who they are going to provide banking services to. Their KYC standards are designed to protect financial institutions against fraud, corruption, money laundering, and terrorist financing. KYC involves several steps to establish customer identity, understand the nature of customers' activities, qualify that the source of funds is legitimate, and assessment of risk and return from the client relationship. I must confess, sometimes the Parliament regulations might have omitted this part, risk and return evaluation of client relationship. But as for the practitioners of financial service industry, banks and finance companies and other financial institutions, they are self-funding, and then they are responsible for their stakeholders, particularly the shareholders, to show a return. At the same time, the ongoing supervision by the regulators on banks and finance companies and other financial institutions, they focus on the profitability of the institution. So risk and return comes into play, although the regulations and the Parliament Act does not specify this angle. That's a basic requirement. The banks and finance companies and other financial institutions must assess the risk and return or the profitability of these such customer relationships at all times, from the point of view, from the point of onboarding the customer. So I'll repeat that sentence again. KYC involves several steps to establish customer identity, understanding the nature of customers' activities, qualify that the source of funds is legitimate, and assessment of risk and return from the client relationship. This is the big picture of KYC, CDD, and EDD. It will be pointless and useless if the customer relationships do not bring adequate margin for the risk that the financial service industry institution undertaking such activity. So the risk assessment, I think the rule number 1 of 2018, the direction issued by the FIU and the Bank Supervision Department, I think there's a separate direction to the non-banks, finance companies, risk-based assessment. So therefore, this identification of the customer process involves risk and return or risk assessment of the client relationships. Little bit of risk on the risk management. When the risk is assessed and when there is no adequate or commensurate return, what are the steps an institution or the risk manager should be focusing on? Mitigating the risk in the first place, sharing the risk in the second place, and first of all, identifying the risk, mitigating the risk, sharing the risk, then de-risking or avoiding the risk. If it comes to a status where the customer relationship is to be terminated because of the return or commensurate return, there are institutions, financial service institutions, who do not hesitate to take steps to terminate the customer relationship. So before that, there are 3 or 4 other steps to be followed by these institutions in reviving the risk return formula. Mitigating the risk, sharing the risk, managing the risk, and also most importantly, negotiating with the customer. The risk angle must be transparently, explicitly discussed with the customer. And the remedies must be discussed, such as bringing other business, new business, to compensate or adequate profit margins to cover the administrative and then profit margins of the institution. So what does the CDD or customer due diligence mean? CDD meaning CDD is the process where pertinent information of a customer's profile is collected and evaluated for potential money laundering or terrorist financing risks and evaluation of risk versus return. This methodology is also known as the risk-based approach, which allows a financial institution to prioritize resources accordingly to areas that require more attention. So customer due diligence is also extremely important. Basically, for the survival of the financial institution. Then CDD aims at collecting data about customers' identity and contact information as well as measuring their risk. Enhanced due diligence, EDD, is used for high-risk customers, as known as those who are more likely to implement activities related to money laundering and terrorist financing due to the nature of their business or transactions. Example, politically exposed persons, PEPs, because of their activity, their power concentration on, or their power exercise on several areas and individuals. There can be bribery, there can be misuse of power, there can be unjust enrichment without any economic value addition to the society. So that is basically enhanced due diligence. In the world of financial crime compliance, CDD and EDD are important and complex field. It aims to uncover any potential risk to the financial institution of doing business with a specific organization or individual by analyzing information from a variety of sources. That is financial crime compliance. So today, almost every online business needs KYC, CDD, EDD compliance, from forex, foreign exchange to international trade to gambling operators or financial institutions. So I'm talking of the new business ventures, business avenues. Whilst complying to the KYC, CDD, EDD requirements by the regulators, the business angles must be promoted. Various business activities must be pursued. New business activities must be pursued. So there should be the compliance suggestions. Compliance should be able to suggest ways and means or other measures that could employ to conclude the business rather than reject the business. Now, the example that I took of the certificates of deposits, after the Financial Transaction Reporting Act of 2006 and Section 2 requiring the KYC data of the customers to be recorded, bankers who were issuing the certificate deposits resorted to retain the name CD, certificate deposit, but write the name of the purchaser on the CD. And also with the requirement to cross it with not negotiable and account pay only. So what does that mean? The certificate deposits have been made a fixed deposit receipt, but they retain the name of CD just to satisfy the requirement of the customer. So, yes, any question? Any comment? So this way, the compliance should be able to suggest other ways of doing the business rather than rejecting altogether. However, performing KYC, CDD, EDD checks are every user is expensive. It adds friction to the customer relationship. And most importantly, it isn't always enough to fight fraud. So there is a cost of KYC, CDD, EDD performance, but still, if you do a real study on the medium to long term, there's a huge gain of sustainability and survival, and finally growth of business. Because on the empirical studies revealing that more than 80 or 85% or 90% of customer base is genuine. They don't want to resort to any undue measures to earn undue profits. There can be, whilst the 85-90% are low-risk customers, there is another about 10% of medium-risk customers who resort to various activities and then jump here and there. And then only about 5% are high-risk customers who would really want to defraud, collect wealth without much effort, like bribe taking and various other unsocial activities. So if you focus on the 80-85% of low-risk customers alone, there is good potential of business enhancement, profitability enhancement by robust performance on KYC, CDD, and EDD. The objective of KYC, CDD, and EDD guidelines is to prevent banks from being used by criminal elements for money laundering and terrorist financing activities. It also enables financial institutions to understand customers and their financial dealing to serve them better and manage risks prudently. Many financial institutions deploy fraud prevention system to augment anti-money laundering solutions, filter out bad users, pre-KYC checks, trigger exceptions, reduce transaction fraud, eradicate defaulting customers, and grow your business safely with complete peace of mind. So the task description: critically analyze regulatory requirements of KYC, CDD, EDD, and the impact on the performance of the financial institution. Conclude the analysis with recommendations for improvements for the future. Ideally, the synergy between regulators and financial institutions, avoiding, I think some words are missing, avoiding costs and other difficulties. Right. So again, the topic is going to be regulatory requirements of KYC, CDD, EDD, and the need for compliance. I think I spent a fair bit of time, about 50 minutes, to explain the requirement and explain the how your research should be modeled. And I even suggested the subparagraph required. Please don't stick to this subparagraph that I suggested. You can have your own wordings, you can have your own subparagraphs, but try to be a little bit creative. Try to understand what is KYC, what is CDD, what is EDD, and the good that is going to be spread to your institution, to your industry, and most importantly, to your personal self of satisfaction, of having a job well done. The day that you spend your life in retirement like myself, you should be able to look back and then think that what we have done in whilst your active job role add to the society. So that's my explanation on the assignment requirement. I hope you could do a very good job. If I have failed or if I omitted to explain any aspect, you can ask any question now, or you can ask any question later on. I think I have given you my email address. Yeah, my email address is here. I'll be all out to support you individually to come out with a very successful research report. The name of assignment number 1. Any questions, please? No questions?
So, is this the only assignment, or will there be further assignments?
For the module 2, this is the only assignment. But I hear Mr. Rupa Singh is also planning an assignment. He was planning. He actually speaking, he should have given the assignment before me. But he was handling the module 1 and then another module 5 or 6. But I was able to overtake him in giving you the assignment. for the module semester 2, the module 2, this will be the only assignment. Yes. Any other question? Yes, please.
Sir, could we send the drafts of the assignment? We will do part of it and we are checking. Should we do like that? Is it?
Yeah, you're most welcome. Because you can email it to me. I will go through and respond to you.
Okay, sir. Thank you.
These are basically further discussion on the KYC aspects on most practical level. Now, in this first slide, I have listed down 10 aspects of the KYC that you would be asking your customers or clients. I think the regulations also, time and again, FIU had been sharing with you minimum KYC standards and so on and so forth by way of directions and gazette notifications. In the light of what I explained a while ago, can you go through these 10 items and highlight what I am missing, what I have failed to indicate here? Because as far as my practical experience, my compliance role function had been I've been more than 15 years, starting from 2003, I think, when I took the responsibility of compliance at the National Bank way back in 2003. There are about 30 to 35 pieces of information that any customer would give you to be recorded in your databases. About 30 to 35% pieces of information. That is varying from customer to customer. Individual customers, corporate customers. There can be customers, individuals who do freelance business, freelance service provision, freelance consultations. And there can be customers with permanent jobs, with other business side businesses. Good examples are the health sector, medical doctors doing private practice, or government teachers doing private tuition, and also running school transport. So can you add a few things here?
Sure, thank you, Mano here.
Yes, Mano.
You have to, there's two items missing. That is expected mode of transaction and expected counterparties.
Very good. Expected mode of transaction, expected counterparty. Thank you, Manu.
Yes.
So you can add that too here as well. You can add those two: expected mode of transaction, expected counterparties. Yes. Okay. One question arising out of that, Manu, expected counterparties, when you list down in a record in your database, if by any chance, while carrying on the relationship, if that particular customer transaction occurs with another counterparty who is not, whose information is not recorded with you, what will be the course of action?
There's a suspicious on customer, this information would be held to us.
Yes, I know.
Then now, when at the time of opening the account, if customers declare this information, and then later on that if we come across with some unusual transaction when we are investigation on this matter, this
Yeah.
information would be useful. That's why I think this information need to be taken.
Very good. Very good. I hope everybody got the message. What Mano was explaining is that when you have the expected counterparty database with you, your job is about more than 70-80% is done, because you know the mode of transaction, you know the nature of the transaction with that particular customer. But having said that, my question was, if a new counterparty was to do a transaction with your customer, it is not preventing. It is not you are not going to prevent that such transaction, but new data can be updated to your database. There's a new counterparty. At the same time, your horizon of information is expanded. New data is accrued to your database. That's what Mano says. Any other piece of information that anyone want to add? How about the telephone numbers, email addresses, Viber?
Good morning, sir. Prabodha here. Sir,
Yes.
Sir, there should be a clause to identify that the party is a PPO, PEO, that means political exposed people or not?
Yes, you are right. You are right. Yes. In other words, a risk category, isn't it? Risk category, isn't it?
Yeah. Because if there is a clause, we can closely monitor, no?
Yes. There are. It should be done very delicately. I have had some experience where some big financial institutions, when they had a question asking whether you are a low risk customer, high risk customer, or medium risk customer, then the customers get panicked. They get different message. What I would, with my experience, what I would suggest is that risk categorization to be kept for yourself, for the institution, your bank, your finance company, as an internal aspect. After evaluating the customer information from the time of onboarding and periodically going through the customer relationship, you can risk categorize the customer to, there are 4 categories, I think, listed by the regulator in the year 2018, rule number 1. Low risk customer, medium risk customer, high risk customer, and extremely high risk customer. So the example that you took, politically exposed persons, falls into extremely high risk customers, including active politicians, their kith and kin and the friends, and also high profile bureaucrats. So what I would suggest is that the identification of risk category, and then also whether they are PEP or not, should be kept to your internal use only. If you can refrain from discussing or divulging the risk category to the customer, or the PEP status of the customer to discussing with him, but you are free to always to assimilate data or gather data from a customer while discussing, interviewing, telephoning, on social gatherings with the customer. You can assimilate as much as information, and this such risk categorization, and then your decision should be to yourself. All right? That's my thinking.
Thank you, sir.
Yes. Any other comments? Any other suggestions?
Sir, for in the case of businesses, beneficial owner, identifying the beneficial owner is important.
Very good. That's a critical information, isn't it? That's a critical information. There again, how do you gather that piece of information for transactions of customer? The beneficial ownership of such transactions has to be ascertained and recorded somewhere. And then if you happen to ascertain any transaction of your customer beneficial owner being somebody else, is that a cause for a suspicious transaction report, STR? Depending on the nature of the business activity, depending on the nature of the activity. Because as you know, STR submission is also confidential, and let the law enforcement agencies or the FIU do their bit of job in investigations. You have done your job by ascertaining the beneficial ownership of somebody else other than your customer. Because you won't, sometimes in most cases, you may not know the third party. Even if you know, sometimes there can be hidden agenda for the use of such wealth and for use of such funds. So it is always prudent to take action to submit an STR as soon as you find out the beneficial ownership of a transaction of your customer, a third party benefiting out of that. That has to be really documented. Of course, there should be more than 100% confidentiality must be maintained. I guess in your organizations, in institutions, STR information is also confidential to your compliance department, a few individuals of your compliance department. And maybe that you can share it with your senior officer like CEO. But they must also be advised to keep confidentiality. Okay, so therefore, beneficial ownership, again, like in the case of risk categorization, has to be an internal confidential document. Okay. Any other comments? Any other questions? All right. And this is for individuals. Did anyone notice that being information of individuals? And then I have put here business registration. Do you know why? Individuals also can do business. Yes. What's your comment?
Sole proprietorship.
Sorry?
It's for the sole proprietorship, sir.
Yeah. You can have a sole proprietorship as a category separately. At the same time, individuals also resort to various business activities, isn't it? Individuals also can resort to various business activities. There are many families while doing a permanent job, they do various other business activities. So there can be a business registration. If you do not have this aspect, it can be a missing information in your database. All right. We'll go to the next slide. Corporates. Can you do the same thing here? Can you suggest any new thing, or you want to object for anything that we have here? These are for corporates.
So we have to pay attention mainly to people who are involved in import and export business.
Yes.
So because they also fall to a very high risk, we have to do a lot of research on such people who they are transacting with, then whether their trades, what they are doing, the transactions they are doing are legitimate or not.
That's a very good suggestion. That's a very good super fine suggestion. Because as you all know, the international trade, there is a lot of malpractices happening, under invoicing, over invoicing, and various tactics, and then advance payments, forgeries in advance payments. So that's a very good suggestion. That can be a new. What you suggest is a item where, or a question in the account opening application, whether you engage in international trade, imports or exports. Is that right?
Yes, sir.
Okay, that's a good suggestion. Whether you engage in import exports, or whether you are hoping or planning to engage in import exports. Yes, very good suggestion. Because of the gravity, because of the impact that can have on the risk profile of this customer. Yes, I agree with you. Thank you for that. Anything else?
So this tax liability under FATCA, is it a compliance requirement?
Yes. Wouldn't you want to know whether the customer is paying tax, or whether the customer is liable for pay tax? You have heard of this FATCA, Foreign Account Tax Compliance Act?
Yeah, that's what I asked. FATCA.
Okay. Anyway, that is for US requirements. But even in the case of local requirements, I think you should be very much aware of the tax status of the customer, because you will try to sell fixed deposits and various other products of yours to the customer. So in that case, tax status of this customer is very material input for you to suggest various products to the customer. Because you should be marketing your products on the basis of suitability to the customer, right? You must not be trying to market your products as just because you have this product with you and the customer may not want that, or suitability for the customer may not be that great for that particular product. So in assessing the customer's wealth and customers, there are some products that which carry tax benefits to the customer, like fixed deposits as against the repo agreement, repurchase agreements. Fixed deposits, if tax-paying customer, there is a tax liability, isn't it? But at the same time, repurchase customers, they are essentially dealing with the treasury bills and treasury bonds. The repo is to sell and buy back the treasury bill, treasury bonds. So any transaction on government securities, there's a different tax status. So you should be able to explain that benefit to the customer. All right. How about the contact lists? Telephones, emails, WhatsApp, Viber. Is there anything here? No, isn't it? So that's very important. Contact details and the key contact persons. When it is an organization, a company, or a corporate, there should be names of key employees. Names of key employees, and it should be with contact details. And added to that, there should be a direct contact person, isn't it? For the bank or the finance company to contact that particular institution, there should be a key contact person, maybe the CFO, maybe the accountant, maybe a finance manager, or in most cases, it could be the CEO or the MD himself. And these officials are also can be changing. So therefore, there can be a necessity to update such contact details. How about their risk appetite, some document, strategic planning or for the institution, or risk, the ability to absorb the risks of transactions, like risk appetite statement. That also can be a really handy document in assessing which product to sell to the customer, company, or the corporate. So risk attainability or risk manageability or whatever. That could be a part of the strategic planning document in that particular institution. And this particular strategic planning document also can be handy for your future business with this particular customer. All right, so you may please add those, what we discussed, to the list of these KYC requirements, information requirement to individuals and corporates. Key regulations on KYC, CDD, and EDD. So far, I'm just focusing on the key KYC, CDD, and EDD only. I know Mr. Rupasinghe would have covered at length various regulations, but today I'm focusing on mainly the customer identification, customer onboarding, customer relationship maintenance, and then ongoing relationship with the customer. FTRA Section 2. I would like to introduce this particular bit of regulation as the key regulation for the KYC, CDD, EDD. Well, before that, there were no Parliament Act, there was no law as such with regard to the customer identification or customer database maintenance. So this is the master stroke, or you have to depend all KYC, CDD, EDD requirement on this particular legislation, and thereafter there were a lot of amendments to that, minimum standard KYC and CDD, EDD, or particularly rule number 1 of 2016, CDD, EDD, a risk-based approach. Then direction number 8 of 2011, customer charter. What does customer charter means? It is, sorry?
So we have, as a financial institution, we have a responsibility to explain the our products and services to the customer before they enter into such a agreement to provide such.
Very good, very good. That's a super explanation. But I need to add a little bit more to explanation. Customer charter requirement basically is to display, to exhibit your financial institution, how beneficial, how you are going to assist the customer in the way that the customer needs. We will be discussing that in the future slide. So the customer charter is a very real direction to the KYC, CDD and EDD, and how you are going to place yourself in servicing the customer charter requirement. Thank you for that comment. It's a very rich comment, explanation. But please add this bit of as well. Your customer charter, basically your customer charter document must be very well designed and displayed in your website or in your advertisements or in your customer lobby, where customers always come and gather for your business. So customer charter requirements are also very helpful in structuring our KYC, CDD, EDD requirements. And then the next one is direction number 7 of 2011, integrated risk management. That is also similar to customer charter requirement. In ascertaining the customer's relationship risk that the institution is going to earn or derive out of the customer relationship, is transactions, and divided into operation risk and marketing risk, market risks, operations market risk, and various other kinds of risks. You should be able to structure your KYC, CDD, EDD requirements to meet the structural requirement of these directions. To meet the structural requirement of these directions. The next one is guidelines on non-face-to-face customer identification and verification using electronic interface provided by the Department for Registration of the Persons, DRP, number 3 of 2020. This is a good example how we can take the provisions of customer charter and the integrated risk management into account. Now take customer onboarding, non-face-to-face customer. Non-face-to-face customer. I can relate an example, personal example, when I was heading the compliance function at the Cargill's Bank, you knew the Cargill's Bank is a very new bank. And I was one of the first few employees of that particular bank. We wanted to use the Cargill's Food City outlets as service centers and to facilitating onboarding customers, which means not face-to-face. And the initial suggestion was that to have a bank employee or two at each Cargill's Food City outlet, but that was with a huge cost and then operation difficulty. So therefore, we proposed to the central bank. We had several rounds of presentations to central bank that we will keep our account opening applications and various other money depositing, money slips and then withdrawal slips and various other things at the Food City and have a dedicated place and use the Cargill Food City cashier girls to accept the customer application, to distribute the customer application form to the customer, get them to fill up and then accept it, and then send by courier to the head office of Cargill's Bank. And for that, at that point, they would be scrutinizing and evaluating the application. And at that point only, the customer will be sent a welcome package with the ATM card. And that ATM card should be activated by the customer by telephoning the operations unit of the Cargill's Bank head office to activate the account and to activate the ATM card. So what did we achieve? We achieved customer charter part of it, where the being service to the customer. Customer need not travel all the way to a branch of the bank. Whilst doing his shopping, he could open an account, do his transaction, deposit cash, and withdraw money as well. And we highlighted to the central bank that in this manner, the compliance to the customer onboarding process, like KYC gathering, is much more richer than the customer walking to a branch of a bank, because we would be verifying the personal address, postal address of the customer by way of posting the welcome package and the ATM card, and the customer's telephone number, contact details will be updated by making the customer to call and then update or validate the ATM card for future transactions. We will be using only the sales cashier girls to dispense the application and accept the completed applications and send them with the physical signature and send those applications by courier to the head office of the Cargill's Bank. So Central Bank actually accepted it. And they authorized, with some conditions, they authorized the Cargill's Food City outlets to be functioned as in such operating units. So in the integrated risk management also, we were able to manage certain risks in that aspect. Operation risk, as well as marketing, and then technology would be working in the favor of the customer onboarding process. So such examples could be used. Now what I gather is that the DRP or Department of Registrar of Persons had developed a portal, in their computers, and with the signing of a MOU with the particular banking institutions or financial institutions, they would allow the computer system of that particular institution to interface with that portal and verify the genuinity of the NIC and to check the address of that particular person. It is a good verification, all right, but looking at the list of KYC information that a financial institution should record of a customer before onboarding and then after onboarding, this is only a small percentage of information that DRP could provide to financial services industry institutions. Imagine a solution of the example that I explained a while ago, that separate institutions responsible for what we were trying to create in the year 2009 and 10. A separate institution storing the KYC data of each customer. And whenever they find additional data of that particular customer going by the NIC, to update that particular base. And then allowing the particular financial institutions to look at, access only the data of customers belonging to them, and then allowing the regulator to access the information of all the customers, all the individuals, 360 degrees, and then allowing the regulator to obtain information of reporting customer information, which the banks and finance companies do individually now, for the regulator to access directly from that particular computer. See the mitigation of risk. See such a project could integrate risk management in mega volumes. And the banks and finance companies could be relieved of most of the risk that they undertake now. And they'll be free to focus on the business transaction with the customer. Right. So next one, circular number 3 of 2021, additional measures to mitigate the emerging money laundering terrorist financing risk during the third wave of COVID pandemic. So that is periodically with new developments, how the KYC CDD data should be updated, amended, and additional risk mitigating measures could be implemented. Then the next one, circular number 1 of 2021, implementation of AML CFT measures on parties involved with online payment platforms. Online payment platforms, that's another risk, high risk business activity. So implementing additional measures to mitigate risks. These are circulars issued by the central bank regulator, particularly on KYC, CDD, EDD measures. So the KYC requirements of Financial Transaction Reporting Act FTRA Section 2, although it is a few paragraphs only, few wordings, you have to enlarge that into these sections to enable compliance, to ascertain client needs, and to ascertain investment objectives of the customer, and to ascertain the strategical objectives of the customer. I think on the strategies, I explained a little bit the importance of it. As a financial service provider, the strategic planning of a customer and awareness of such planning, strategic planning, how important it is going to be to ascertain the risks and then implement risk mitigating measures. So what I want to highlight here is that the Parliament, the legal draftsman, the Parliament had structured the Section 2 of the FTRA in such a manner enabling the financial industry institutions to enlarge that and to adapt it to the best benefit of the financial industry. Further, financial objectives, risk tolerance. Remember, I spoke about risk appetite statements of customers, the liquidity requirements of customers, investment objectives, investment preferences, tax position. Is that gentleman who raised the question? Tax position also are very important elements for you to have in your KYC database. Copies of your identification documents, NIC, passport, driving license, etc., etc. I need to explain a little bit on corporate customers, this aspect of identification documents. Apart from the business registration and company registration, the promoters or the directors and the key employees, MDs, CEOs, CFOs, CROs, CCOs, their information, their individual NIC, passport, driving license, their individual contact numbers, details, their individual employment details, their individual business activities, their individual companies that they run, which can do cross business with your customer entity, and which you are going to facilitate as a banker or finance company. And furthermore, as you all sometimes may be knowing, the stake holding of your customer's entity by those individual directors and their affiliated business organizations also matter. Because the larger the equity holding by your particular director, particular executive in the customer organization, is going to drive their business strategies depending on the whims and fancies of the individual who is controlling that stake. So this is extremely important, and it runs into depth for analytical purposes. It can be very confidential, but still that analysis must be performed. Then permanent residential business addresses, contact numbers and email addresses, very important. Times and emergencies for contact purposes. Occupation and employer, name and nature of business and expected income. Reason for opening accounts or the transaction, all are really important. Of course, as Mano explained, the identified counterparties, identified business volumes, expected level of deposits, all matter. Charter direction, the impact on the KYC, CDD and EDD. Customer charter direction is by the Bank Supervision Department, the Central Bank of Sri Lanka. This sets the standards of fair banking practice envisaged by the customer, which we explained a while ago. Information of understanding the banking products and services. That was also indicated by one of the participants. Information folios of banking products that you offer and banking services that you offer. Then most of this information is recorded in the key fact documents of each product. Key fact document. These key fact documents are also must for the products that or services that you offer to the customers, for the customers to read and understand it in a nutshell. What are the facilities? What are the features? What are the options the customer could expect? Within those, there are more frequently changing aspects as well, like rates of interest on deposits, rates of interest on advances, variable information from time to time, which must be displayed at the customer lobbies, at the websites. So the customer charter requirement also plays a direct role in organizing your KYC, CDD, EDD structure. Then awareness and understanding the terms and the conditions on products and services. They also are part and parcel of key fact documents But if they are lengthy, you can have them separately. But you must really have them on your websites for the customers to read and understand. And they are an essential part in your product or service application, which customer is going to sign and request you for the product or the service. Then periodic statements to customers, printed or electronic form. What are these? In the case of savings account, savings passbook. Now the electronic form is that e-passbook. In the case of a current account, it's a periodical statement or e-statement. Now, to avoid the cost of postage and then inefficiency of postal delivery, this is very handy. Furthermore, the banks and finance companies are going to save a lot of money. 20 rupees postage stamp or registered letters, additional fees, and the stationery envelopes and then other printed material. If you make arrangements to send your e-statement to the customers, and the customers' ability to download and read those statements or archive, they store them, has to be also thought of or considered, and customers must be assisted. Then financial literacy programs, maybe by way of dedicated literacy programs by electronic form to the customers to listen, read, and understand, or public forums at dedicated locations. And these are going to definitely benefit the public and the customers in understanding the products and services that the customer could avail, could buy, could use out of your organization. And these are also going to be beneficial to your staff, who should be promoting, who should be selling such products and services to the public. Code of conduct for employees aimed at customer protection. The code of conduct for employees must be also designed and made aware to the customer, to the staff, to the employees, that the boundaries that they must observe merely for the customer protection. Customer must not be taken for ransom. Customer should be given freedom to think, and then only thing the employees could do is supply information and then request appeal for decision. And also there is a concept called cold calling, meaning customers should not be bothered on the telephone or by personal visits after 6 or 7 or 9 p.m. or when they are busy. If you happen to call them or visit them in late hours, it should be by appointment. That is a concept of cold calling. Should be prevented at all costs. Then code of conduct for agents aimed at customer protection. there are agents that are going to be used by financial institutions, like the example that I explained about the Cargill's Bank using Cargill's Food City teller girls. They are supposed to be agents. So they must also be given a code of conduct and then explain their boundaries, their limitations for the protection of a customer. So another important aspect on the customer charter direction is the customer complaint resolution. Complaints handling officer must be appointed, a senior officer with an unbiased reputation who would analyze each and every complaint and deliver a judgment, resolve a problem. And if the customer is not happy, customer should be advised, provide information to reach out to financial ombudsman, seeking justice, seeking remedies. And if still financial ombudsman's decision, judgment is not acceptable to the customer, customer should be advised to reach out to the court process, rule of law. So all this information must be discussed effectively through the customer charter of your institution, published in your website or the lobby of where the customer meet, gather, for them to read and take necessary action. Few more aspects of customer charter. There should be special attention and care for those needy people with disabilities. There should be a special attention and care provided. And there should be special attention for clergy. And there should be special attention given to senior citizens, professionals, those with physical disabilities, example, wheelchair customers. Especially there is a Parliament Act where access to be provided to wheelchairs to reach out to a customer lobby from their vehicle or on the road access. And those who cannot read and write, they should be assisted to fill up the deposit form, application form, and various other services should be provided. Under the customer charter, the obligation of the customer is only to pay the bank charges, commission fees, and etc., etc. And then also to provide KYC data to the financial institution when they are asked for, when they are requested. A genuine customer should be able to provide this customer data to the financial institution without camouflage, without hiding. thereby paving way for good customer okay. So last slide on this presentation before a break. Code of conduct for employees, which is a very important aspect, is to train or educate our employees of their responsibilities, and in particular protecting the reputation of the financial institution when they are interacting, when they are transacting, when they are meeting, when they meet at the social gathering, the social obligations, and everything should be focused on customer protection, including protection of customer secrecy. Customers' transactions or any other information, wealth should not be discussed with third parties. And then almost always endeavor to customer convenience. Customer convenience should be in mind. And with the customer transparency, direct customer transparency, there shouldn't be any hidden fees, commissions. The transparency should be at maximum. Then increase reputation and integrity of financial institution. Focus employees on areas of ethical risk. Focus employees on areas of ethical risks. Provide guidance to employees. And particularly this code of conduct, when it is drafted and then shared with the employees and then discussed, explained, made them aware, that will provide guidance to the employees as to how business should be conducted with increased reputation and integrity of the financial institution. Okay, that's the end of this presentation. And we shall have a break of about half an hour. Now it is almost 11 o'clock. We will come back at 11:30. We shall come back 11:30 and then discuss further on basically on extensions of this subject aspect, because KYC, CDD, EDD is the base or the foundation for all transactions, all activities. So let's meet at 11:30. So let's begin. This presentation is on effective application of internal and external regulations. We'll be touching on these points. Sources of dirty money. Because I tend to, actually I was asked to discuss a little bit of fundamental basic things, because there can be students who follow this compliance subject for the first time. Therefore, I will go little shallow ends as well. Please bear with me, those who are familiar and then those who are into compliance, those who know little more on the compliance subject, please bear with me. But I guess it will be a reminder to them as well. Let us surf through the shallow ends as well as deep ends, and then finally come to a good understanding of the subject. So sources of dirty money, methods used by money launderers, regulatory framework, CDD again, transactions of financial institutions. This time we will go into the real transactions of categories of transaction of the financial institutions, the non-compliance implications and penalties, directors' responsibilities, reporting to regulator, STR, sanction screening, asset freezing, PEPs. And these are few abbreviations that we'll be using. As said, these are very familiar to those who are into compliance and who have learned compliance or read about compliance. But those who are the beginners or those who attempt for the first time, the abbreviations will help a lot. And please feel free to raise hands or ask any questions, unmute your microphone and ask questions as we go along. That will help to increase the understanding of others as well. So therefore, I would encourage you to raise your voice, raise your hand at any point. Right. So in the subject of compliance, these are the golden rules. If you practice this, you cannot be found fault with for any negligence, any misuse, anything being not done. You would be considered, if you follow these 5 golden rules, you will be considered a professional practitioner of compliance. Rule number 1, identification and due diligence. Starting from the customer onboarding level, and as you go along with the customer relationship, identification and due diligence is a must, including the counterparties of your customer. Then keeping records of transactions, customer records. Now, present day, with the high profile core banking systems, these aspects have been made very easy. And as said before, there are about 30 to 35 pieces of customer information for each customer can be recorded and stored, archived for each customer relationship. Then monitoring and reviewing, meaning as you progress through the customer relationship, increase transactions day to day, monitoring them, whether they are in compliance with the indicated parameters of income, receipt, expenses, counterparties with whom the transaction happen, and the flow of money, mode of transactions. So monitoring and review is another golden rule. Fourth one is very important, reporting. Having those recorded, having monitored, first of all, having identified any suspicion, reporting to the regulator, to the FIU, to the means provided to you, particularly Lankafin, Finnet, and now the new system is GoAML. Those online reporting platforms make it easy for you to report and efficiently with confidentiality. I would suggest the reporting has to be done with the concurrence of your senior management, although the compliance officer has the power to report directly without informing anyone. But the teamwork is essential, provided the confidentiality, secrecy, exclusivity can be maintained. The fifth one, aligning risk versus return. Though the Parliament Act's rules, regulations by the regulator may not directly speak of risk and return, the regulator in the inspections, in the on-site surveillance, they look for the profitability, the margins retained, the sustainability of the institution as an intermediary participating institution. So therefore, if you are lenient on the return aspect commensurate to the risk that you undertake in customer relationship, you will not be able to show your performance. So compliance need to ensure that there is adequate return for the risk undertaken as well. Such return reducing or diminishing periodically should be taken as high concern. And as discussed before, risk identification, risk mitigation, risk sharing, and de-risking. Please remember that concept very clearly. De-risking is to identify the risk and eliminate the risk. At the extreme end, even with a matter of terminating a relationship is also a part of de-risking process if that particular risk cannot be managed. So if you perform these practices, golden rules, 5 golden rules in your financial service industry, yourself as a compliance executive, compliance officer, or your organization as a service provider in the financial industry cannot be found fault with by the regulator, by any law enforcement agency or the court of law for negligence or misusing or misdirecting or not reporting. And there cannot be a compliance penalty. And there cannot be a reputation damage if you get your team, including the senior management and the compliance team, to understand how to practice these 5 golden rules. Okay, responsibilities of the financial institution. The mandatory requirements under the FTRA are customer identification, ongoing due diligence and scrutiny reporting transactions exceeding threshold limit to FIU. Presently it is 1 million. And those threshold limits must be really adhered to. At the same time, you must be vigilant for the violators. There can be customers in breaking up the volumes to several transactions, and then volumes can be below 1 million. Those structured transactions should be able to identify and then reported through STR. Such intentions in itself is a bad habit on the part of the customer, which may bringing in ill reputation and then also compliance penalties. I don't know how many of you are aware, about a decade or 1.5 decades ago, there was a employee compliance officer of a foreign branch of a bank in Colombo had to go to jail for this offense. Some customer transaction arising out of Pakistan, which was not so clean. To avoid reporting, they split into several transactions, and this particular compliance officer, knowing the fact, he also had been the part of planning to break it into several transactions and executing such transactions. So finally, when the things were revealed, investigated and revealed in court of law, he was sentenced to jail. Reporting suspicious transactions or information relating to unlawful activities. Disclosure concerning property in the context of terrorist activities. Difficult things, but when you observe such things, should be able to report with the convenience of the reporting platforms. One might ask that the reporting platforms are only to the compliance officer or the compliance department to report to the FIU or the later. How about the branch network? It is the compliance officer's responsibility, compliance department's responsibility to organize, arrange with the help of your IT and operations to structure a system that the branches, the front office staff of the branch network should be able to report such suspicious activities to the responsible compliance officer or the compliance department in confidentiality, maintaining the confidentiality with ease, with very little typing, very little filling forms. You should be able to use your computer system or at least the email system to report such activity to the compliance department, identify responsible officers at the compliance department for them to have an overview, review, and research, because reporting such activities by way of STR or any other form to Lankafin or Finnet or GoML is you are providing information to outside parties, including the regulator. So before embarking on pumping information to outside, though the confidentiality is maintained, a thorough study must be done. An evaluation of the impact on the institution and the staff members must be done. And thereafter, once you decide as a team, yes, this should be reported, that reporting must be very confidentially done, so that the customer involved or outside parties involved are not aware that this reporting has been done by this particular organization. Because the FIU of the bank supervision or the law enforcement agencies who would be investigating such activity will not leak information or use such information so that the customers involved or outside parties involved are aware that such investigation is happening and the reporting has come from this particular institution. So this 100% guaranteed such identified information of institutions or employees will not go into the customer. So customer will not know who had reported this. They will investigate and prosecute those customers hiding or hibernating the information provided. So the appointment of a compliance officer reporting to the board of integrated risk management committee must also be done. And then that's a requirement under the clause 14 of the FTRA. So much so that in the bank's senior management, the duties and functions and the responsibilities of the compliance officer is listed in the section 14 of the FTRA. No other responsibilities are identified by the Parliament Act other than the compliance officer. So the responsibility of compliance officer is statutory. It's very important. The compliance officer and the senior compliance staff might happen that even negligence or willful activity can lead them to penalties such as financial penalty and then jail sentences, personal basis, if they do not perform their duties properly. Then maintenance of internal procedures and systems to assess money laundering and financial transaction, financing of terrorism risks. This aspect, various compliance staff play down or do not understand the gravity of it as a whole. As in the case of facilitating the suspicious identity at the front office of each branch or back office of each branch, and making arrangements for easy reporting confidentially. Such arrangements has to be done with the support of the senior management, the IT departments of the institution, and guidelines and training should be provided through the help of the HR or training to the frontline and back office staff of the respective business units to efficiently report such transactions. Because FTRA also provides that any suspicious activity must be reported to the FIU within 48 hours of arising such suspicion. It is true that the arising of suspicion cannot be identified or cannot be recorded, but it is all the more beneficial for the institution to have a smooth reporting system. Ideally, the reporting format by the branches to the compliance should be the same format that the STRA format required by the FIU, so that the compliance staff does not have much time, will not spend much time will not waste much time in filling up unnecessary details. The key information here to be submitted is the reason for suspicion. Reason for suspicion. The branch staff can indicate a reason. Of course, the compliance staff can communicate with the branch staff later on and then amend the suspicious reason to safeguard the reputation of the institution. But however, the accurate details, including the name and address and the account details of the customer involved, must be in the STR. Staff training, including senior management and the board of directors, is very important. I don't know how many of you had got involved in training your senior management and the board of directors on the compliance issues, but it is essential. It is not a waste of time. It is an investment to inculcate proper compliance culture, which will lead to sustainability and survival of the organization. And eventually, medium to long term, will lead to business growth and increased profitability.
Excuse me, sir.
Hello?
Excuse me.
Yes, please.
On the previous slide, I would like to put your attention on the number 6.
Yes.
The appointment of a compliance officer reporting to the board integrated risk management committee.
Yes.
So which means that all STRs and the issues raised by the compliance unit, is it to be discussed or diverged to the integrated risk committee?
No, I didn't mean that. The reporting line of the compliance officer is not the CEO or MD. It is the board integrated risk management committee. Right? That's a reporting line. But the STR information should be kept into the very minimal number of individuals. Very minimum number of individuals in the compliance department. And then if at all, any crucial member in the Board Integrated Risk Management Committee or the CEO or the MD, or sometimes in the case of chairman, if necessary, very few individuals, but you don't need to discuss such things, such STRs at the Board Integrated Risk Management Committee level, because there's potentially possibility of the details of the STR being divulged or informed to the customer responsible, customer involved. There can be board members in the Integrated Risk Management Committee who is part and parcel of big corporates, who are members on the big corporates, sitting in the board of your organization. So you must be very mindful of such presence. So therefore, those individual STRs should not be discussed at the meetings. But if you are 100% sure that certain individuals or critical members, crucial members of the Board Risk Management Committee are independent and not connected to the customer involved, and if their opinion is critical to the submission of the STR, then you might discuss and obtain guidance from such board members. So I hope you got the message.
Yes, sir. Thank you.
Right, very good. So the integrated part of the risk management, in the case of compliance risk, managing the reputational risk, all such AML compliance as a key part of the risk governance, the credit risk, market and liquidity risk, operational risk, and particularly money laundering and terrorist financing risks of transactions involved, which have a direct impact on the reputation, and then which require the Parliament tax and the regulatory aspects should be complied with, because money laundering and terrorist financing risk identification and reporting falls part of the operational risk. Compliance and regulatory risk, financial crime risk, and legal risk, all part of operational risk. So this is how the integrated risk comes into play with regard to the compliance risk. It can be partially credit risk with regard to a loan granted, with regard to lease, with regard to international trade, under invoicing or invoicing, and part of liquidity or market risk when it comes to international trade and foreign exchange transactions or treasury transactions. And it can be part of operational transaction, like SWIFT messages, SEFT messages, online payments, IT operations. So this is how the integration, all the risk categories, composite of that integrated manner. So when you're speaking of anti-money laundering, combating of financial terrorism, compliance risk can be a composite of all these. which is going to damage the reputation risk. And finally, the mere survival or surveillance of the organization. So therefore, it has to be viewed at the macro level and at 360 degrees. This part is a little theoretical. However, the theoretical analysis, the summary of the theoretical analysis is presented here. Okay, introduction to anti-money laundering and combating of financial terrorism. Effective AML-CFT regimes are essential to protect the integrity of markets and of the global financial framework, as they help mitigate the factors that facilitate financial abuse. Financial abuse. Can anyone give me an example of this? There are famous examples. Financial framework, global financial framework, abuse of global financial framework, and identified misgivings, wrongdoings. They help mitigate and factors that facilitate financial abuse. I hope, yes. Hello?
Yeah, sir, there is an example of Wells Fargo. They tried to open customer accounts and do illegal form of cross-selling to customers. They open accounts without the customer's knowledge, and they were later on fined by the Financial Conduct Authority, I think, of the US later on for illegally.
Yeah, was it US or UK?
I think the US, UK also got that was a different bank. So in UK, it was Scottish. A different bank had also done something similar. They had profiling, I think, risks. They had profiled the customers incorrectly. Yes.
Thank you. You're well read. I think you are aware of such international events. Very good. Thank you very much for that. And locally, I hope everyone remembers the LTT and the TRO. LTT issue, the civil war that was going on, ended in 2009. And the Tamil Rehabilitation Organization, supposed to be a NGO, non-governmental organization, with the publicized purpose or motive of helping the orphanage girls in the eastern province, facilitating collection of money through financial remittance schemes, including famous schemes, and through banking channels to remit money from various parts of the world for this organization TRO, who maintain bank accounts in almost all the banks in Sri Lanka. And finally, the senior officers were found procuring parts for aeroplanes in the US. US FBI found out and they informed the government of Sri Lanka. And when investigated, more than 70-80% of the funds collected by them had gone into the use of terrorism by the LTTE. Only about 10, 15, 20% of the money had only gone into the displayed purpose of orphanage girls in the Eastern Province. So finally, when things were investigated, the TRO organization was banned not only in Sri Lanka, in various countries in the world, including US and UK. And Sri Lankan FIU law enforcement agencies and the compliance officers of banks and finance companies also did a marvelous job in identifying the remittances that were coming into these accounts and reporting STRs. That period, 1 or 2 years, I think the years of 2006, 7, 8. The number of STRs received by the FIU increased manifold to about 1,000, 2,000 STRs in that particular year. Whereas now usually FIU received only about 100 or maximum 200, 300 STRs per year. In this particular period, number of STRs received by the FIU and investigated was in thousands. So the result was that the illegal funding, use of the financial system to provide funding for terrorism through banking system and accepted remittance framework financial system was identified and mitigated. So that was a job well done by the compliance community and the law enforcement agencies and the FIU. So that's an example of this, and then as a good example of how if people perform their job well with understanding, how it can lead to the national development and then contribution to the economy. If not for this particular identification and mitigation of the financial abuse through the financial framework by the financial community, the LTTE's ability to procure weapons, including aircrafts and underwater vessels or vehicles for attack, submarines like, would have been more and more if this financing was continued. The only other method of financial contribution left for the LTTE was only undial system or unorganized or unauthorized systems. So that again, there are a few cases where the undial parties, companies, individuals supporting that remittance framework was reported by the banks, compliance communities, and investigated. So there's a good example here, really good example. And thanks for your Wells Fargo example. That's an international example, but this is very much local and performed by local financial and compliance community. So let us come to have a look at the macro picture. Anti-money laundering and combating of financial terrorism is approximately 10% of total compliance responsibility, meaning there is much more other compliance responsibilities. AML safety is roughly about 10% only. AML safety are important external regulations, meaning AML safety regulations are enacted by the Parliament by way of Parliament Acts. And based on that, directions and regulations are issued by the FIU, central bank, various department regulations as well. So they are external regulations. There are other external regulations as well. There are other external regulations where the deposit-taking institutions like banks and finance companies and other financial institutions, for example, should lend to a minimum percentage of total lending to agriculture, housing, and various other categories. So such regulations are there. So all those external regulations in the total compliance function, I would put as 40%, a ballpark figure. The balance 60% is internal regulations. Internal regulations by whom? Internal regulations by the shareholders, board of directors, senior management, corporate management, etc. of your own organization. What are those? The compliance function is part of your organization. Primarily, in the first level, responsible to your board of directors, to your shareholders. And the AML CFT function, the responsibility goes beyond the reporting path has been crafted, segregating separately to the regulator with some responsibility from compliance. That's true. But when you go and ascertain the big picture, the internal regulations such as shareholder wealth, shareholder profitability, shareholder interest of the board of directors. Remember, the board of directors are the agents of shareholders. Board of directors are appointed by the shareholders to safeguard their interest. The board of directors appoint the senior management as their agents, and they delegate their powers to the senior management to operate the business, manage the business. So when you take the internal regulations, requirements, finally ending up with profitability, wealth maximization, there are so many minute indications, regulations, requirements that the compliance officer and the compliance function, or the senior executive for the compliance, must understand the responsibility properly, and they must cater to the 60% internal regulations and then also the 40% external regulations. This, if you practice prudently, the compliance department, compliance officer, then you avoid the friction between the management and the board of directors with compliance. Because the role of compliance must be appreciated by the board of directors and the shareholders and the senior management. There shouldn't be a friction. They should be going in hand in glove. the compliance function should be welcomed, should be wanted, and should be appreciated by the shareholders and the board of directors of the senior management. And it is not that the compliance of just near sight of the compliance guy, compliance officer, the business units reject the arrival of the compliance officer or compliance executive. The management would not anticipate the presence of the compliance officer, compliance executives. Those scenarios must be avoided, those eliminated. There are examples, very clear examples. In the past, one of the big banks had to offer a golden handshake to the compliance officer, chief compliance officer, for obstructing certain deposit customers. And then the golden handshake was given to the compliance officer, and then some other person was appointed as compliance officer because of the requirement. The MD and then board of directors thought that this particular compliance guy, by stringent rules and regulations, sometimes much more than the Parliament Acts and the directions by the FIU, the questionnaire was, the deposit customer was lengthy. But through attitude change and allowing certain time, because the customers who want to make a deposit or do a particular transaction with the institution would also know the rules and regulations and law of the country. Just a frank discussion with that particular customer could eliminate a lot of misunderstandings. And then balance part, the compliance officer and the compliance department, senior executives must organize training for your branch staff, frontline staff, how to handle such difficult situations. Should be given more time for the customer to fulfill compliance requirements, to submit KYC data if one or two is missing at the first meeting. And the compliance officer and the compliance staff should be able to manage such events with the regulator, FIU or any bank supervision, with time amendment or time enhancing time targets to obtain certain documents, certain proof, and so on and so forth. And then also compliance staff should be in a position to understand the length and breadth of the business activity and the complications, and suggest alternative routes, alternative arrangements to circumvent compliance violations, rule violations, and to retain such business and to acquire such business, new business. So the compliance capability and skill matters a lot, not only in retaining existing business, to in attracting new business. Compliance is not a back office job. Compliance is more a front office job. In fact, compliance must make time available to meet customers and discuss their ability to bring in more business compliant to the rules and regulations. That way, relationship managers, business heads would love to accompany compliance officers to meet business customers, business angles. And that way, my personal opinion, compliance guys must be rewarded, compensated more than other business units, other business officers. Because not only the compliance guy facilitate compliance to the rules and regulations, whether it is internal or external, they would possess the skill of negotiating and retaining the business or attracting new business. So therefore, in an ideal situation, extremely perfect situation, contribution to the performance of the company or the bank by the compliance should be able to ascertain quantifiably certain amount of so many millions of rupees, so many millions of dollars as the contribution by the compliance to the business activity or the performance of the company or the bank. This is the macro picture. Many, I know, misunderstand that the compliance is a deterrent to the business growth, which shouldn't be the case. Any business activity which is supposed to be conflicting with the rules and regulations, whether external or internal, the compliance personnel should be able to mitigate that irregularity or non-compliance and then make it more compliant and present it to the customer and the regulator and the business head, that you can make this business more compliant and add to your business portfolio, and also add how to enhance the margins. So that type of skills should be with the compliance. You can ask any questions if you think so, but this is the macro picture. This is the macro picture of compliance responsibility. Although the section 14 of the FTRA lists down only the responsibilities by way of a regulator, it says a legally drafted responsibilities. But actual practical responsibility of compliance is much more, because these business entities, finance companies and banks, financial intermediaries or participating institutions should be part and parcel of the economy, supporting the business angle. Whilst identifying the irregularity or non-compliance to the regulations, eliminating such non-compliance aspects and make it more compliant. Thus, the economic activity can be enhanced. If not for the involvement of the compliance, these participating institutions, the finance companies and the banks, might simply reject such non-compliant business. But the compliance personnel, if they really think of ways and means of adapting methods and mechanisms to avoid non-compliance parts, non-compliant portion of the regulations, amend them to be compliant, and give it a practical aspect, practical look, to look as if they are compliant, not as if make them compliant. Not only the customer who comes with the business, your organization, your finance company, your bank will benefit out of it. And finally, the economy will benefit out of it. However, the compliance should have the personality and the skill to explain to the regulator, we did this with these changes so that the non-compliant part had been eliminated. In fact, the compliance part had been improved to overcome the non-compliant aspects. That would pave way for the increased business volumes. And as I said, such contributions by the compliance should be reported to the board of directors and the board integrated risk management committee for the evaluation. To evaluation of the services or the functions of the compliance. In such cases, compliance should be made part and parcel of frontline staff, because their responsibility is to not only to retain the existing business, to enhance the business volumes. This is a very important understanding aspect. I know for sure many people wouldn't think of in this line, but my extensive research on this aspect helped me to come to this conclusion and understanding, and I'm able to present it to you today. If you have any question, please ask. If you want to comment, please comment. If you don't have any comments or questions, we'll go on to the next slide. The sources of dirty money, predicate offenses. I would invite you to add or amend anything that you want to. Illegal betting, bribery, basically so socially unfriendly activities. Drug trafficking, extortion, embezzlement, frauds, human trafficking, terrorist-like scams. There are a few scams going around in the present era, isn't it? Organized crime, pollution, pornography, pyramid schemes, smuggling, trans-border shipment of hazardous waste. We do have a very practical example right now these days, isn't it? Express Pearl ship. Other social unfriendly activities. So, you want to add anything or delete anything or amend anything? Or is there anything that you don't understand? This is to facilitate the beginners or those who are following compliance for the first time. I know for sure others would understand, others would have gone through this learning several times.
Excuse me, sir, kindly give us an example for this number 6 and number 7, please.
Extortion and embezzlement. Right. Example for extortion. is something like if you are given an official vehicle to facilitate your official transport, but time and again or invariably use that for your personal running without much contribution to the official business, that is extortion. You use your position to enrich yourself in other words, unauthorized and unjust enrichment, isn't it? Extortion is a very simple example. And of course, there are very many frequent examples like politicians and then people with power obtaining commissions and then kickbacks and amount of money, 10%, 20% under the table, and enhancing the cost of the project, extortion. Another name is bribery, but when the bribery part cannot be proven directly, it can be called extortion. Then the number 7, embezzlement. When there are large transactions, particularly financial transactions, this very much happens in the treasury activities of governments and banks and then large multinational corporates, conglomerates. Embezzlement, one would conclude a transaction with a small percentage of funds, commission allocated to the arranger or individual, which is not authorized. These are very frequent in the large treasury transactions in the multinational banks. There are several examples in the world of such transactions. There is one very clear example in a multinational bank that happened in Sri Lanka. I don't want to elaborate that example because those perpetrators are still in Sri Lanka and they're living. So it may be a bad omen to them if I describe that. But however, if I say like this, you all as employees or senior executives of a bank or a finance company are given certain business targets for the year. And then you are able to achieve that business target for the first quarter itself. The entire annual business target is achieved on the first quarter itself. And on the second, third, fourth quarters, you just enjoy your life, or even sometimes give concessions to the customers, and then you don't make special effort or hue and cry to attract more business. So what's the result here? If you had made the same effort that you put on the first quarter, on the second, third, fourth quarters, how would the business volumes grow for the organization? Exponential, isn't it? But you ensure that your bonus, annual bonus or whatever performance bonus are paid to you by the organization by achieving the annual target in the first quarter itself, and then you relax or deprive the organization of business volumes for the balance 3 quarters. So it is a loss for the organization for the balance 3 quarters, isn't it? Whereas you performed for the first quarter and then ensured your performance bonuses and targets payment and salary increases or promotions or whatever. So this embezzlement, depriving the benefits of the business for your organization. This is one part of embezzlement. And there are many other examples in the large treasury transactions. Since I had the treasury experience also, I know for sure, but let's not harp very much, because there can be only very limited participants, students or from treasury background. And for others to understand such mechanisms would be a little difficult. So these 2 examples for extortions and embezzlement would be adequate, I think. So other predicate offenses, this is not an exhausting list. There can be others. I have said other socially unfriendly activities. So just to find out, in other words, just an ordinary thinking, law-abiding, honest person's contribution to ensure that contribution, that's it. And anybody trying to harbor profits, gather personal benefits on socially unfriendly manner should be avoided. So this education is primarily to make the students understand how they should be framing their mind. So methods used by money launderers, methods, structuring, surfing. Criminals divide cash and give to different people, surfing to deposit in multiple accounts to avoid the reporting thresholds. And the regulator wouldn't see those reporting when you divide, split, or make multiple transactions below the thresholds. And the use of front shell companies. Front or shell companies. Shell companies that you form a company with a bogus address. There are so many internet companies. There are no employees, no identified persons. And the company's name is used for transactions. And if anyone wants to trace back, there is no such address in existence and no individuals can be found. So such transactions must be identified through address verification and identity verifications. So those shell companies or front companies, activity should be identified and reported very quickly so that things can be harmonized for everyone. And use of false identities, documents, and strawmen. You use third parties to transact. I think most of you have gone on overseas travel. Have you seen, or have you experienced, or have you seen, have you heard, have you read that some drug traffickers are on the hunt at the airports and the harbor for people, unsuspecting people, to carry their volumes of drugs in briefcase, and they would have a briefcase ready to look as if executives are traveling. They will approach you, they will be friend, they'll become friend, they'll befriend you on the lobbies, and then keep that briefcase by your side. And then sometimes if the authorities or the police or narcotics guys want to check that briefcase, they will slowly get up and walk away. So then you, unsuspecting, innocent person, sometimes might get caught for merely being seated near the briefcase, when they find out that the content of the briefcase is narcotics or dangerous drugs. So those are the examples for these. Then use of illegal accounting techniques, use of unauthorized financial institutions, opportunities lending acquisitions, use of underground banking systems. So such things are methods or common methods used by money launderers. So regulatory framework to identify such money launderers and then terrorist financiers. These are organized by the Financial Action Task Force, FATF. Financial Action Task Force, in their basic 40 recommendations issued in 1990, and thereafter another 8 recommendations, basically based on terrorist financing after the World Trade Center and Pentagon attack in US. So, and then also the Tax Compliance Act, FATCA, and the US Patriotic Act. These are international regulatory framework on which local Sri Lankan regulations are also based on. The US Foreign Account Tax Compliance Act and then the US Patriot Act, I'll give just a small description for those who are not heard of before. The Foreign Account Tax Compliance Act, although the tax evasion is a predicate offense in the FATF recommendations and then in the international arena. However, locally in Sri Lanka, tax evasion had not been made a predicate offense as yet. But Sri Lankan banks and finance companies, the participating institutions had to abide by the USA Foreign Account Tax Compliance Act because it is made an international norm. The basic is that in US, individuals and businessmen has to pay a high rate of tax to the US government. And the US tax authorities, knowing that the US individuals and businessmen register their businesses overseas or travel overseas and then do their transactions, merely to avoid the tax liability, they enacted FATCA, which means any financial intermediary world over, any corner of the world, is requested to identify the US connectivity of individuals and the businesses, maybe in Sri Lankan context, a green card holder or anybody who had gone to US and then having a permanent address in the US, who has become liable to US taxation, those who have earned income from US sources are liable to US taxation. The US tax authorities require all the financial intermediaries around the world to identify people, customers with such connections, with green card, with US permanent address and US liability to tax, and report their details over the website provided specifically. First, the financial intermediary has to register as a financial service provider. And then under that registration, if you find such customers, green card holders, or anybody who had earned foreign US income, liable for tax, details have to be reported. And at a later stage, they would require to obtain the tax liability of such customers to the US government and deduct such amount from their cash flows or accounts and remit to US tax authorities. This led to several complications, whereas one is Sri Lankan authorities have not made tax evasion a predicate offence in Sri Lanka, but Sri Lankan banks and finance companies and intermediaries are made to abide by US regulation, FATCA, to identify tax liabilities of customers for US. That's one. Second, Sri Lankan Banking Act and the Tax Implementation Acts does not permit, and the Foreign Exchange Act does not permit Sri Lankan banks and finance companies to deduct money from customers, local customers, and remit outside Sri Lanka. And if that is to be made effective, those Parliament Acts has to be amended. So the US authorities are given certain other avenue for this. They have provided some government-to-government reciprocal agreement for which the Indian government had agreed, reciprocity, whilst the Indian customers who has US connections, tax liability is deducted and remitted to the Indian tax authority. The US government has to identify individuals and businessmen with Indian connections who are liable for Indian taxation has to deduct and remit money to US tax authorities. And between the two countries' tax authorities, they exchange the cash flows. So that is a reciprocity agreement between those two governments. So we from the compliance community in Sri Lanka, the banking fraternity, through the SLBA, requested the central bank to urge the government of Sri Lanka to enter with such reciprocity agreements with the US government, which I think had not materialized so far. However, US Tax Compliant Act, by way of registered participating institution number, has to be available for each bank and each finance company to transact international transactions on behalf of your customers, specifically when it is in US dollar. If the FATCA registration is not available, your correspondent banking arrangements, your international trade transactions, your outer remittances, your inward remittances can be stopped by the US tax authorities in the US when they are channeled through your Nostro accounts in the US, when they are denominated in the US dollar. So that can be a huge loss of money if any organization, any participating organization's money is stopped by your Nostro bank in the US. So therefore, central bank advised all the local banks and finance companies to register through the website of the US tax authority as a participating institution and obtain that number and indicate your number for each and every international correspondent relationship, so that in case any transaction is stopped or possibility of stopping a transaction is avoided for the moment. So those are the complications in managing international transactions and international maintaining correspondent bank relationships. Similarly, US Patriot Act also came to being after the World Trade Center and Pentagon attack. This particular act requires the participating institutions, banks and finance companies, to appoint a legal company in the city of New York to represent yourself as your agent in case any of your transactions, customers are identified by the US authorities, US OFAC, Office of Foreign Asset Control, the equivalent of FIU of Sri Lanka, Federal Reserve or any law enforcement agency identifies any of your transactions or customers related to any terrorist activity, for them to refer such transaction to an agent in the New York City. So that legal company has to represent your organization, for which the agency arrangement itself has a fee, annual fee, and each and every referral also commands a fee. So this is called Patriot Act certification. Certification is that your appointment, your agreement to appoint US legal company as your agent, and their CEO's agreement to act as your agent. This is called your US Patriotic Act certification. This again has to be in place to facilitate your international trade and correspondent banking relationships. So these two certifications, FATCA number and the US certification, is a must to function correspondent banking relationships and international transactions, particularly when they are denominated in US dollar. So those are the international scenario of regulatory framework. Before coming to the local regulations, now the time is up. Let me conclude today's discussion by making a special reference to the FATF. FATF, Financial Action Task Force, is the world body enacting recommendations for the compliance in relation to money laundering and financing of terrorism. It is using certain punitive actions against countries, against organizations, multinational organizations, local organizations, and individuals by way of naming and shaming. If any country or a multinational organization or a bank or a finance company or a local organization or an individual is not complying to the regulations or recommendations by the FATF, in their publications, they can name the person, they can name the company, they can name the bank, they can name the country, they can name the multinational organization as non-compliant. What will happen thereafter? The business counterparts of the country, multinational organization, bank or finance company or the local company or the individual will not transact with that party when the publication identifies you as a non-compliant entity. That's called name and shame. As of now, there are several countries in the world which are identified as non-compliant, namely North Korea, Iran. I think Myanmar is also a certain identified country. So no other rational thinking country or business entity would think of entering into a transaction with such countries or organization or banks or finance company or individual. So that punitive action by naming and shaming have been meaningful and have been a force in implementing their recommendations world over. So let's come to a conclusion for today. And from next Monday, we'll discuss the local regulations. And then let me again appeal to you to attempt on the assignment, because you have got only 3 weeks and you have to write 3,000 words, and it should be researched and material found, literature survey, and organized and written. As I told you, I'm all out, I'm available all the time for you individually to send me emails of your draft. I will express my opinion and guidance for you to complete a successful assignment. So with that, Let me ask you whether there are any questions for today. All right. So enjoy your food and then start revising and then writing the assignment. Any comment? Any question? No? Then let's say goodbye for today.